Welcome to The Real Tea. I'm your host, Tammy Murphy, broker-owner of RH2L, bringing Miami Valley real homes to love.
And I'm Elle Sollenberger to give my perspective as a home buyer.
We're going to give you the key to Miami Valley real estate. We're here. We have a guest today, which is super fun.
Yes, hi.
Justin, go ahead and introduce yourself to everybody.
I'm JustinWilliams. I'm a loan officer with Union Home Mortgage. So I'm here to guide home buyers in purchasing a home.
All right. So you're the guy with the money.
I am. I deal with all the financing. So I deal with all the boring stuff behind the scenes while you deal with all the fun stuff.
The boring stuff behind the scenes?
Yes.
Did you think this is the hot seat today or what?
It's a little hot. Yeah, it's a little hot, but it's something a lot of people don't like talking about. But when it comes to financing and money, and
especially now.
Yes, especially now in a market like that we're in right now, it's tough.
Like it's all your fault. These interest rates are so high, right?
A lot of people think it's our fault, but it's not. And interest rates are high. They're high across the board, and eventually they will come down.
But they're high compared to what it was a year ago, 3 years ago.
Yeah, so what a lot of people don't understand is 2020, when was it? 2020, going into 2021, the 2%, 3% rates are not going to come back anytime soon. So, and I think that's a lot of issues we're coming into now is Sally next door and Johnny down the street. They have a 3% interest rate, so no one wants to sell their home to purchase a home because they're waiting on rates to get down to 3%, which isn't going to happen. Probably, knock on wood, ever again. And a lot of that had to do with the pandemic, but it's the reason why we got out of that pandemic with the financial crisis was to get mortgage rates to that low. So I don't think that's going to happen again, but people need to come to realization that rates in the 5% to 7% range is normal, and 2% and 3% is
gone.
It's pretty much gone. It's not going to happen again. So it's just a realization kind of education process.
And that's really, one of the things that we've talked about is the process itself and how do we make sure that you make the best decision. So it really does come down to people understanding financially what they are able to afford, what they're comfortable in paying, and the rate is just a variable of that. So what we saw, obviously, because, from the time when it was very low interest rates, we had buyers coming from everywhere. People were able to come into a first-time home buyer position and at still price points that they were very moderate still. But post-COVID and everything that has happened since then, we talk about these dynamics because Dayton had this horrible trifecta of things that again happened.
Correct.
With the 2019 Memorial Day tornadoes that ravaged 15 of our communities. We had multiple people, loss of homes, rentals were eaten up as fast as they could, and we have never recovered from that because from there then we went to COVID, and then you had building material shortages. You had people who were living in their home that now figured out, well, it's too small for me, I need to buy. Interest rates were 3%. Everybody was jumping on the bandwagon. If they missed it, then they were trying to make renovations to their current home. And we just have never recovered since.
Correct.
And interest rates now have gone up. And, people remember when we were telling you they're at 3%. You can buy a much bigger house for less money because the purchase prices hadn't skyrocketed.
Correct.
And because of the interest rate, you were still in your affordability range. Now they have to lower that purchase price, but prices have gone up. And now they're paying more on the interest rate. So they are feeling that double negative basically impact them. And I know it's pushed a lot of buyers out of the market.
It does. It has. And a lot of it has to do with some buyers that were on the fence of being able to afford to buy have now been pushed out because of interest rates. And I think, 6 one, half dozen another. I think interest rates, a lot of it has to do with the media. I'm not going to lie. A lot of it is a fear type of don't buy, wait for interest rates to come down type of mentality. But there's strategies around that. The issue is, I think, is a lot of people just keep thinking in the back of their heads that 3% is where they need to be.
Right.
And 3% is not what they're going to get. And a lot of that, it really comes back to the loan officer. It comes back to the, the company that loan officer works for. It just really breaks down to education.
Exactly.
You have to educate your buyers. Like, hey, this is the expectation. You have to set an expectation up front. Like, 3% is not going to be the way. It does not help the economy. It doesn't hold for a stable economy to have a 3% interest rate. Hence why, people are complaining about paying $9 for a dozen of eggs.
Mm-hmm.
A lot of that stuff all revolves around interest rates. And when it comes to mortgages, and when we get to that range of a 5% to 7% range, that is a healthy economy.
But giving perspective, because a lot of the people who are trying to be in the buying sector now don't have perspective of when interest rates were between 12 and 18%. I know my mom, our home was 18%. I remember that being talked about, and we would think right now that's crazy. Yet if you're carrying credit card debt, you're paying 29%.
And that's what.
So people have to have a realization of the reality of things. Your loan payment on your car, which you're probably doing for a 5 or 6 year, is a 6, 7, 8, or 9%, depending, obviously. So there's a lot of things that go into this, and this is why, in my opinion, I always want somebody to be able to talk face-to-face with a lender.
Exactly.
Because it makes a difference in being able to sit down with you, Justin, and not necessarily in the hot seat, but at least being able to say, well, here's my concern, and here's what I want to be able to do. So tell me, if I buy and the interest rates are a little higher right now, is there an option where it will automatically kick over to a refinance? Or what is it going to take in order, why would I want to refinance my home if I've already paid out all this money now? Is there a reason why I should want to refinance it down the road? Yeah,
and a lot of people need to understand that no matter where you go right now, no matter who you talk to, whether it's an online lender, a bank, credit union, a private lender, interest rates are high, period. There's no way around it. But the way you have to look at it is right now, in my mind, as we sit here and it's March 15th, is probably the best time to purchase a home. And I say that one of two reasons. One is you're hitting it right before the spring, like the hardcore spring and summer market. Interest rates are high. Buy the home that you want to buy, that you fall in love with, that you're pre-approved for. And then 6 to 12 months later, when interest rates start to dip, we refinance. And what our company at Union Home Mortgage holds is, since we service that loan, when you're ready to refinance, that refinance just flips over since we service it, and it doesn't cost you a dime to refinance. As long as you're able to pay for the appraisal to hold value of your home, and you can make probably, I would imagine, the first month's mortgage payment, at closing, it's extremely seamless. So where every home, we just got a report yesterday that last year in 2023, going, from 2022 to 2023, homes on average are gaining 5% in value every single year. They're gaining.
And we know in our area, the auditor has put out information that it went from 15 to 34%.
Yep.
So home valuation, and Elle, obviously you benefited from that because we had a home that we were selling during this process as well.
Right.
One that you had bought just before all of this really kind of spiked. So we bought right, and now we're able to sell it in a time where it's going to benefit you as well. But you did use Justin, and you found his services to be reliable and something that you could have some comfort in, because we've talked about that trust that's needed throughout the process.
Yeah, so I kind of wanted to go through how you develop a relationship with a lender. And it's weird how I met you.
Yeah.
I literally Googled the top companies for mortgages, and your previous company was on the list, and so I was like, oh, I wonder if this one's around here, and because that was a nationwide search, and your office pulled up, and I said, oh, I went to school with his wife, let's contact him. So then I reached out to you, I told you what I needed, you were extremely easy to work with, told me what I needed to do and whatever. So, but what I wanted to do today is kind of walk through, say I'm a brand new home buyer and I'm coming to you, how does the whole process work?
Yeah, so I'm much different, as you both obviously know, than most loan officers. Is I'm very hands-on, very communicative. I will communicate from the time you submit an application to the time you close on that loan, and then therefore onward. You know, I never go away. I'm also, it's not, I don't want to say hand holding. It's a weird term, but for a first-time home buyer, buying a home is probably the most stressful, honestly, and the largest financial decision you'll ever make in your life.
Correct.
I mean, you're going from possibly leaving a parent's home from renting to buying $150, possibly less, possibly more, $1,000 purchase, and you don't know what's going on. So there's lingo that a lot of loan officers and financial services, banks, credit unions throw out there. People don't know, like, what does this mean? Why am I paying for it? So on and so forth. So my job, I don't like to claim myself as a loan officer. Honestly, you'll notice in my email tag and anything that it's not. It's kind of
because it's personal to you. You're
It
providing
is,
a service.
But as a loan officer, it's kind of intimidating.
Right.
Is the word I want to look at. Like, I don't want to call a loan officer. It's like I look at myself as more as a mortgage advisor. You know, I look at it as I want to walk you through what you're paying for, why you're paying for it, what does that mean, where you're at in that step of the process with your loan, and can we get you approved for the amount that you're looking for? Mm-hmm. So I know, obviously with Ellie and with you, your guys, our communication style together was bar none.
Superb.
Funny.
Fun,
Amusing at times.
Hilarious, bar none, probably the best that I've ever experienced. But that's obviously because of our relationships. But that's my first initial conversation with any first-time home buyer, whether you're a first-time home buyer or anybody that comes to me, is when I make that initial conversation, I don't want to talk shop or business, I should say. I just want to get to know you. What do you want to look for? What is your budget? What are you most nervous about? What do you have questions on? And it's kind of a feeling out of, and that's how I was with Ellie. Like, obviously we had background that we didn't know we had because she knows my wife, but it's just one of those things where it's like, I want you to know, like, and trust me before we move into making the largest financial purchase of your life. Because if you don't know, like, and trust me, I've already lost the deal. You don't trust me. I don't feel comfortable with it, so I want to make sure that you trust me in helping you make this decision. And I think that's kind of where I start initially. So. And
speaking to that, we've talked about the relationship that gets developed between the client and their realtor. I always want to make sure that relationship expands to include their loan officer, their lender in the process, and that you have to not only trust them, but you have to be honest with them. And if you're really nervous about something, and if you really know it doesn't matter that you approve somebody for a $400,000 house price, right? They may not be comfortable in looking at anything over $200,000. And if they are not honest in communicating that to you and to me up front, then we're going to be always looking at the pie in the sky that's never going to get fulfilled, and there's going to be a lot of frustration.
Well, and I tell people all the time, like, when I make that initial conversation, I no longer talk about what is your price range. I position it as, what is your max mortgage payment you want to pay? Especially with mortgage, with interest rates the way they are, because it's depending on the county. Ohio's the craziest county, the craziest state, let alone Montgomery County is what I meant. It's like you could have a house that has $100 a month taxes, $200 a month taxes, or $600 a month taxes. So it's more of positioning that price range of what is your monthly payment that you're comfortable paying with. So someone who's leaving a rental situation and they're paying $1,000 a month, but they want to get pre-approved for a home, and that payment is estimated at $3,000 a month.
Right.
We need to have a conversation. Is this something you're comfortable with?
Right.
If not, then we need to back it down. And then that's kind of where the whole education process comes in. If you're not educated on where you're at price range compared to interest rate, compared to payment, that's why I'm there.
Right.
And it starts and ends there, honestly. So
then you issue a pre-approval, and what do you generally have to give for a pre-approval?
So in order, again, I'm I'm very thorough. So it's a good thing. It's kind of a double-edged sword. I'm very thorough whenever I issue a pre-approval, specifically with Tammy or any of my realtor relationships that I have, that if I need to understand where, your job, income, I always call it CIA. It's the easiest acronym to understand, obviously because of CIA, but it's credit, income, and assets. I need to know your income, your credit, and your assets. I need to know where your credit depicts a lot. A lot of people don't understand credit.
That's a whole nother conversation.
It's a whole nother conversation, which I will come back and gladly speak about. But credit, income, as long as you have a solid income and you have solid assets, then I will then issue a pre-approval, because what that does is it validates that pre-approval to your realtor. It validates that pre-approval to that seller who is looking at your offer, because all of my pre-approvals specify at the very bottom that credit, income, and assets have all been verified. Mm-hmm. So what that does, it puts you, when you go to make an offer on a house, a leg ahead somebody else that has just a pre-qualification, because there's much difference in between both. So
what is the difference? So
a pre-qual is just you telling me. A pre-qual is just like somebody says, like, hey, I've worked for 10 years at X job. I make X amount of money, and this is how much I have in my bank. So a lot of people are like, well, that's a pre-qualification. We'll go ahead and issue that to their realtor. They go to put that offer in on that house, and they go to make that offer, and their offer gets chosen to when then their loan starts. And then when they go to validate that information, it's not there. Mm-hmm. I do all of that up front, which is the difference between a pre-qualification and a pre-approval. Pre-approval, I validate your credit, income, and assets. So that's a huge, huge difference, especially when it comes to a realtor, because it gives them the peace of mind of knowing, Justin has checked A, B, and C off the list. Like, this is rock solid.
So then does that make it faster to close?
100%. So if I have all of that information up front, that's less information. One, I have to request after the offer has been accepted. And two, that information has already been crossed off the list with our team, approving that loan. So a loan for us does not typically, knock on wood, take 30 days to close, which is the average turn time for a contract. Mm-hmm. We'll close, I've closed some, with Tammy as early as 10 days, we've had clear to close, and it's our average right now as a company. We just got the report yesterday from application to funding is, I think they said 18 to 19 days.
That's
from
awesome.
From the time you submit an application, we can get you closed on a home within 19 days.
Which is a big deal. When we talk about the contract and you've got a seller who's wanting to sell and get moved on, right? The days where we used to put 45 days, mm-hmm. 60 days closing, man, those, I can tell you, I haven't written a contract with 45 or 60 days 100%. On it for a while.
And it was funny. I just had a lead yesterday call me. It was a friend of mine. He's looking to purchase, and he was like, hey, I've been hearing, from friends and family that, I should just predict a 45-day close. And I'm like, who are you talking to?
Yeah.
I'm like, I haven't closed a deal in 45 days in 5 years.
Yeah. Yeah.
And he goes, really? I'm like, man, how early do you want to close? And he goes, I don't know. First part of, middle of April. I'm like,
easy.
Yeah. Well, let's get it done. He's like, really? I'm like, yeah, dude. I'm like, I can do a deal in under 30 days. He's like, well, that's crazy. Everybody's been telling me, 45 days. I'm like, yeah. The days of 45 days closings are gone.
And it makes a difference because the seller has at least some confidence that, hey, this month this is going to be taken care of. I'm not going into another month. Mm-hmm. And it really puts a loan process in competition now with cash offers, because that was the difference that would set them apart. Somebody buying cash, they can close in as fast as 10 days if they want, if everything's lined up with the title company. Well, Justin, you've closed multiples for me at 13, 20 days.
For sure.
Easy.
For sure.
You feel like I'm giving you a break when I say, we got 30 days to get this closed. And then it's like, oh, can we close early?
Yeah, can we close early? Yeah, like that's fine. We can do it. And I think that's, I kind of position it that way too. And I let my buyers know, like, if once you get pre-approval and you go under contract, I always do it with yourself for sure. Like, it's just one of those things, like, if you're up against multiple offers, and that's the biggest thing in the Dayton market, there's not a house you're going to purchase right now that is not going to have more than one offer, period. I don't care what you're purchasing, it's going to have multiple offers. So I position myself like, listen, I will personally call that selling agent and be like, listen, if you need to close early, I'll close the deal under 20 days if we need to get this done, so that my buyers have, again, a leg up against everybody else that's positioned at 30 and 45. So it's a huge, huge advantage.
Right.
So I also wanted to kind of clue our listeners into what goes on once you've submitted that loan application. You're under contract, the underwriting, the scary underwriting.
Yeah, the underwriting's...
It's not the Undertaker. It's not the Grim Reaper.
The underwriter is the be all end all. So we all get it. It's if anybody's done any of their research, it's the one thing that I position a loan, and I will tell. I've done it for you. I do it for all my clients. Is I position a loan as tight and as clean as humanly possible before that ever gets to underwriting. So basically, once you go under contract, you have the loan. All I do is update your file because I've already gathered your information that I needed prior to your pre-approval. So again, it speeds up that process.
Yeah.
So that takes out multiple days already up front, which people don't understand because it's behind the scenes. So once I'm gathering pay stubs and bank statements and retirement statements and W-2s, a lot of LOs will then ask for that. And that's where they kind of get caught behind the 8 ball, because if they then get that information under contract and it doesn't match, you're behind the 8 ball. You have to retract. You could fall out of contract due to financial reasons and everything else. But we do all of that up front. So then once you're under contract, all I do is basically update your loan profile and submit it to underwriting. Now, underwriting on our team is a 24-hour turn time. It's actually less right now due to volume, obviously, but you could be, outside of appraisal, you could be, once that loan is submitted to underwriting is going to review it. So they're going to review your income. They're going to make sure that's correct. Your assets are validated. Your job, they're going to verify you're obviously employed still. And then once they validate that, they could literally, from application to conditional underwriting, with the condition only being the appraisal, we could get you, approved in 6 days.
Which that's great.
Which is crazy to think about, but
Yeah.
that's just how our team operates. So we're different because we have our own team. So like, we're Nick, Angelo, and myself, we have our own processor. We have our own, underwriter, funder. Like, we work hand in hand, day in and day out, to where once we get a file, it can go bam, bam, bam. Outside of pinning the appraisal, which is out of our hands because we're waiting on the appraiser to submit it back. We could have you, approved within 6 days, easily.
So speaking of appraisal, how does that work?
So the appraisal is a secondary option. It's not an option. It's like kind of a secondhand person that we have to pay, the client has to pay, and that we have to schedule for that individual to come out to scope the comps of the area of the home you're purchasing, to make sure that the home that you're purchasing holds value. And it holds value to the actual contract price. So if you're selling a home for $300,000 in a certain region, they need to make sure and validate that that home is worth $300,000. So what they'll do is they'll come out, they'll review that that home personally, and then they're going to actually review comps as well. So homes sold recently, same square footage, same bedrooms, same bathrooms. What did they sell for? And then they're going to compare it to that home that you're purchasing. If it holds value, which we have not seen, knock on wood, a appraiser come under value on any home, in over a year and a half, 2 years almost, they will give us a report. And then that report tells us, hey, if you're buying that house for $300,000, they send us that report, that appraisal report of, hey, it's valued at $300,000, you're good to go.
Okay.
It could be valued above, which is great for the buyer. Okay, let's say if you're buying it for $300,000 and it's valued at $315,000, you're walking in with $15,000 in equity. Okay, let's go to the other side. If it goes in under $300,000, say $295,000, then the seller and buyer have to agree. You cannot sell a house for more than what it's appraised for.
With a loan.
With a loan.
With a loan.
Correct.
Right.
100%.
But let me throw this out there and just ask you. Remember that one time that we had that client? I won't say who she was, but she wanted to write an offer for $100,000 over the list price.
Yep.
Remember that?
Yep.
Did that make you nervous?
Yep. it did.
And here I am on the phone like, Justin, it's definitely worth it. So we're cool. I don't think we'll have a problem with the appraisal.
Yeah. So, in times like that, I put trust in I'll go back to where I'm different. I trust my realtors. Again, like Tammy herself, I hold my realtors very close to heart. I hold them close to my chest. They're my people. So if that's what they say, I trust them. But again, you have appraisers that it's just, sometimes it's different. I've had appraisals to where it's like a complete, and then the sellers or the buyers are like, well, I want a different appraiser.
Yeah.
And I've almost agreed with them. Like, this is an awful report.
Yeah.
Like, let's try to get a different appraisal. And then that appraisal comes back as is at value. So it does defer. It's a very subjective
It is.
type of.
But the appraiser is one person you don't get to choose
Exactly.
in the
Correct.
process.
Nobody gets to choose.
No one gets to choose them. I cannot contact them. I cannot email them. I cannot call them.
I can't do it either.
She
They
can't-
really don't
yeah.
want the realtors to be involved with it. I liken it to the specialist, the doctor who's coming in there. They've got all of this. They know what they're doing. They're there for just this one piece of this procedure, and nobody's going to sway them. It doesn't matter that you feel like, well, the home has all this special character, and I'm willing to pay more, even if, and now none of that matters. They don't want to know the fluff of it. They just want to go in and do the numbers. They're analyzing it by a number.
And what's crazy about appraisers and what people don't understand is I've actually had an appraisal done to where someone is fully gutting their kitchen in the meantime. And they'll be like, I don't want to do this because it'll affect the appraisal. Like, that does not affect an appraisal.
Really?
It does not. Like, it's just square footage, bathrooms, bedrooms, like where it's at. Now, it was going to be finished before the closing, so then we would have to send him out just to verify, obviously. But people think that they need to hold off on selling. They need to hold off on buying X house because something is not clearly renovated yet. But a lot of that does not matter because they're going to look at comps no matter what. Just because you're taking your refrigerator out and putting a new one in, that's not going to impact a $320,000 house. You know what I mean? So.
Yeah.
It really comes back to just education for that buyer and education for that seller, honestly.
So then you're approved, clear to close, and what all is encompassed in that monthly payment?
Yeah, so that's a very good question. So a lot of people, and I really wanted to talk about this while I was here, because when people want to purchase a home, they think, and I'm not sure, and maybe it's the media, maybe it's family members, so on and so forth, that they just need the down payment to buy a home. And I think that's the biggest misconception when purchasing a house, is not understanding what all is having to be paid. A lot of it is just for the state of Ohio. So I deal with a lot of VA clients that are flying from, transferring to Wright-Patterson Air Force Base from out of state. They don't have when they purchase that house in Arizona, it doesn't matter about, that didn't happen here. Well, that's not Ohio.
Yeah.
Okay. I will tell you, Ohio is one of the most expensive states to purchase a home in. I know it sounds crazy, but it is. So when you go to close on a home, how I describe it to folks is your total cash to close. Okay. And how I am as a person when I go to buy a car or buy anything is I don't like being told, well, you can add this, you can add that, this can make this. I don't care what any of that stuff is. How much is my payment going to be? How much is it going to cost me to walk out this door with that new car?
Right.
For our instance, is to buy this new home. So how I describe to every single one of my clients is I talk about it is your total cash to close is how much this home is going to cost you, how much money you're going to have to bring to the closing table, period, to leave with that house. So it's going to be your down payment, your taxes, your insurance, and your title fees, period. So a lot of people don't understand, and there's LOs out there, there's companies, there's loan officers, banks, credit unions there's a section, which I do on my social media, of escrow. It's your taxes and insurance that you have to bring to the closing table no matter what.
How much is the insurance?
It's a state guideline. So Ohio, you have to bring 12 months of homeowner's insurance and at least 3 to 4 months of property taxes up front to the closing table, okay, no matter what.
So is that something that you can negotiate with the sellers?
You cannot. So this is where a lot of people get into trouble, especially when let's say per se I get shopped. Well, I'm talking to X company, to Y company, to so and so. How cheap can you get it? Well, this is the only section in a loan estimate that loan officers can actually move. They can take it out, they can send it to you with nothing in it, and it will make your loan estimate look $3,000 to $4,000 cheaper than the next guy. And what that does is it creates this whole misconception of like, oh, I'm getting a steal over here.
It's not really an apples to apples comparison.
It's not, because in Ohio, it has to be paid. So how these companies are gaining business is they will leave it blank, and then they'll get that business, and then a week later, they'll add it in. So, one way or the other, that's how. So the way I describe it to all my clients is, listen, you're going to have to pay. These are your estimated fees. You're going to have to pay taxes and insurance. It funds your escrow, and your total cash to close to walk out of that closing table with this beautiful home is X amount of dollars, whatever the case may be. So, and then a lot of people will take that, and it's just natural. It's the human nature. It is what it is. I don't get upset about it. And they'll take that, and then they'll take that to company X, company Y, company Z, and you'd be like, well, this is what he told me, this is what he told me, this is what he told me, and they will all be different.
Right.
They will. So,
and then that's where, again, obviously, I want to make sure that the buyers are doing what's best for them financially, that they do have the opportunity to have comfort in, I'm getting a good deal, I'm not being taken advantage of here. But then there's another part of that conversation that I have is that while not everybody has a relationship with their bank or their credit union or a mortgage broker or a lender, they do have different roles throughout this process. And to me, the most important thing is being able to have confidence in what that person does. And so while you can get a quote online and say, oh, well, they're not charging me all these additional fees, I'm going to go with this. You also won't be able to get a hold of a person at an 800 number when it's time that there's a critical question. And when the listing agent wants to talk to that lender to make sure that this offer is 100% solid. So there is a whole lot of confidence that goes behind knowing that if a client is using your services, you're a lender that's here local, and if they can't get a hold of you, they're going to call me, and I'm going to get a hold of you.
Exactly.
Because I'm going to find you.
Right. You
know that.
You will find me. And I think that I pride myself on that.
Yeah.
Honestly, as a personal, just my personal brand is communication, period. I don't care if you're a first-time home buyer, if this is your fifth house you're purchasing.
It goes a long way.
And it comes with yourself as well as a realtor. Like, I have my realtors close. Like, they know me, after 5 o'clock. I don't work Monday through Friday, 9 to 5.
Right.
There is no such thing.
I think you were at a swimming pool with your family.
Yes, I was.
When we got a phone call from you to the listing agent to confirm that our contract was absolutely able to close in 3 weeks.
And what I was trying to do is mute my 3 screaming kids out of the background while I was trying to make a business call at the pool with my kids for Ellie's deal. And it's just one of those things where I take pride in that.
Yeah.
Because I know it separates me from others.
For sure.
I know, a lot of people will break it down to cost. And a lot of people are cost-centric. It's America. Everybody cares about cost and price. But I'm telling you, and I tell people this every time I talk to them, is we might be more expensive. But I promise you, your service and you being able to contact me Monday through Sunday is going to be worth you being comfortable and stress-free getting to that closing table on time, if not early, and closing on the house of your dreams. And you were right. When we got that call from Elle, I saw the phone, I saw the number come across, and I'm like, holy cow! Like, I'm literally sitting around a school of screaming kids at swimming at a pool on the weekend. I'm like, I was trying to mute it. I went to the backfield and took it, but that's just how I operate. I mean, it is.
But another part of that is not only what you just said, but you said it earlier in that you also service your mortgages.
Yeah.
So what people may not understand is usually you'll get a couple of payments coupons when you go to the closing table, and this is where you're going to send off your first few payments. Then it's probably going to get sold. So you may not want to set it up on the computer for auto pay because
100%.
they're going to send it.
Yep.
Your company actually takes and keeps those mortgages.
Yeah.
So again, that confidence in being able to say, Justin, what the heck is going on? I mean, I'm a year and a half into my mortgage and I don't understand what happened. They are going to be able to call you.
100%. And now a first-time home buyer might not understand that aspect, so
Right.
I'll gladly explain to them why that it is an advantage. But for those folks who've bought multiple homes, like I know when I bought my first house with my wife, I mean, it was sold off within, I think by the time I left the closing table, it was
Right.
to some
Already
company.
gone.
Yeah, it was to some company out in California. But the biggest advantage of that is we service our own loans, and not only do we service them, it is all built onto a platform that you can have on the app on your phone. You have no idea how nice that is, especially when it comes to the end of the year or
Right.
when you need to pull a mortgage statement.
Right.
Like, hey, what's your mortgage statement? Pull it right off your phone. What are your taxes? Or, what do you need for your taxes? You pull it right off your phone. And then that also is an advantage is when that refinance boom happens, which it will happen. Whatever comes up must come down.
Right.
Okay, so yes, we're sitting at 7% interest rates right now across the board, 7.5. By the end of the year, we're projected, Fannie and Freddie may have projected them to be 5.5.
And that's about a 2% interest that really does make a difference.
That's a huge difference.
For the buyers.
Agree, 100%. And for the folks who've bought in the past year and a half.
Right.
For those people who've bought in the 8%, 7.5%, or even 8% and higher, that's a significant savings you will have on your mortgage payment.
And I know one of the lines you use is date the rate.
Yes,
and
that is
marry
my
the mortgage.
that is my cliche line that I use everywhere. Is you date the rate and you marry the house.
Yeah.
Okay. It does not matter about interest rate, guys. It's you find the house you love, you buy it. If you're financially able to do it, you
Right.
buy the house you love. Get into it. Period. Worry about the interest rate later, because it's not something that you're going to be stuck in for 10, 15, 20 years.
Right.
It's an interest rate you're going to be stuck in with maybe 12 months.
Right.
Let's be honest. So, you're not going to be out anything crazy. But what's going to happen is you're going to look back at your friends who waited. They're going to still be on the fence while you're going to refinance, to that 6% rate, 5.5% rate, 5% rate. And then now they're going to be putting in offers on homes
Right.
with 40 other people.
Right. And not only that, but where price points were when it was 3%, a starter home was $100,000. Starter homes are $150,000 to $175,000 now. Same exact homes, same exact communities, and investors call me all the time. Well, I'm looking to spend $100,000 or less. Good luck.
Yeah.
Because at that point you're going in
There's no point.
probably rebuilding a whole house at that, and it's just not there. The inventory isn't there.
Yeah, and we tell people, we just got a report on Monday that homes are appreciating faster than they ever have in history. So people think that there's going to be a housing crash. There's not. They've put enough
There's
laws.
so much demand.
They've put enough laws and they've put enough regulation on the lenders to where a housing crash isn't going to happen. So what people don't understand is that when interest rates do drop, it is going to be an absolute bloodbath in the market.
Yeah.
It's going to be 2021 again. And instead of 3% rates, it's just going to be a 5.5% rate.
Right.
But instead, back then when people were putting an offer in a home and there's people lined up down the street to view it, it's going to be the exact same thing, and people don't get it, and we're on the cusp of it as we speak.
Mm-hmm. And which is why doing something in off season, if there's such a thing as off season, I know this past winter was probably one of the slowest seasons that we've had.
Yeah.
There was a lot going on. We can't blame it on the weather because that's one thing that we didn't really have to deal with that was miserable, unlike right now with it being really spring, but it's not.
Yeah, right.
It's a fake spring.
It's a fake spring.
Yeah.
But people who have less competition in the market have more options.
Mm-hmm.
You get to negotiate, and we saw where buyers are back to being able to ask for a little bit of closing cost assistance, or
Correct.
maybe they get the seller to cover their home warranty, or they don't get any grief if they are contingent. And as soon as that competition heats up, all of that's off the table, and you can't be in a home that you need to sell in order to make this purchase because they're not even going to consider a contingent offer.
Agreed.
And I know that's one of our topics that's going to be coming up again. And Justin, thanks for coming out and talking with us. We appreciate you being in the hot seat.
Yeah, so one of the things that we do is ask for a tip for our listeners. So what is your number one tip from a mortgage officer?
My biggest, and I tell this to everybody, I'm telling it to my family members, my cousins, and everybody, is save, save, save. When it comes to money, assets go a long way, you guys. I don't care if it's your checking account, savings account, 401k, different type of pensions, doesn't matter what the case may be. That just builds strength in your loan profile. So I don't even care if we're ever going to use it. Okay. Let's say you only need, $10,000 to close, but you have $100,000 in the savings account. That's fine.
Yeah.
Okay. I tell people my biggest tip for any single person that I whether I have them pre-approved now or they're looking to purchase in the summer is great. Your income and your credit's great. Save money.
Put some money away.
I don't care if you're getting a gift from someone. Put money back, keep saving. I always tell people, just to be safe, it's 1% of the total home loan that you're looking to purchase. Just be safe. You're never going to need that much. But let's say if you're looking for a $200,000 house, have $20,000 somewhere in assets. Whether it's $5,000 here, $15,000 there, $5,000 there, somewhere. But save money, because it just adds for the validity of your profile, strength of your profile. Underwriters love it, and your loan will be approved extremely smooth. So my biggest tip is to save.
Awesome.
Well, thank you.
Absolutely. Thanks, guys. Thanks for having me.
Thanks for joining us today on the Realty Podcast. If you enjoyed the knowledge and entertainment today, please subscribe and share with your friends. We will be embarking on a journey that bridges the gap between realtors and clients, uncovering the heart and tea of real estate.